Decentralized finance, also known as DeFi, uses cryptocurrency and blockchain technology to manage financial transactions. DeFi aims to democratize finance by replacing centralized institutions with peer-to-peer relationships that can provide a full spectrum of financial services. This can be simpler things, just like everyday banking, loans and mortgages, and more complicated things like contractual relationships and asset trading. If we take a look at today, almost every aspect of banking, lending, and trading is managed by centralized systems, operated by governing bodies and gatekeepers. That is why consumers need to deal with a raft of financial middlemen to get access to everything from auto loans and mortgages to trading stocks and bonds. The consumer, so also you and I, cannot bypass middlemen like banks, exchanges, and lenders, who earn a percentage of every financial and banking transaction as profit. We all have to pay to play. Furthermore, there are still a lot of people who simply cannot have bank accounts or access several financial services. With DeFi, you don't have to pay any middlemen, and DeFi is accessible for everyone with an internet connection. So where exactly is the difference between centralized and decentralized finance? In centralized finance, money is held by banks and third parties who facilitate money movement between parties, with each charging fees for using their services. For example, a credit card charge starts from the merchant and moves to an acquiring bank, which forwards the card details to the credit card network. The network clears the charge and requests a payment from the bank. Each entity in the chain receives payment for its services, generally because merchants must pay for the use of credit and debit cards. All financial transactions are overseen in centralized finance, from loan applications to a local bank's services. Decentralized finance eliminates the intermediaries by allowing people, merchants, and businesses to conduct financial transactions through emerging technology. Through peer-to-peer financial networks, DeFi uses security protocols, connectivity, software, and hardware advancements. Wherever there is an internet connection, individuals can lend, trade, and borrow using software that records and verifies financial actions in distributed financial databases. A distributed database is accessible across various locations as it collects and aggregates data from all users and uses a consensus mechanism to verify it. Decentralized finance eliminates the need for a centralized finance model by enabling anyone to use financial services anywhere regardless of who or where they are. DeFi applications give users more control over their money through personal wallets and trading services that cater to individuals. To summarize, DeFi provides a lot of benefits to their users. Accessibility. Anyone with an internet connection can access a DeFi platform and transactions occur without any geographic restriction. Low fees and high interest rates. DeFi enables any two parties to directly negotiate interest rates and lend money via DeFi networks. Security and transparency. Smart contracts published on a blockchain and records of completed transactions are available for anyone to review, but do not reveal your identity. Blockchains are immutable, meaning that they cannot be changed. Autonomy. DeFi platforms don't rely on any centralized financial institutions and are not subject to adversity or bankruptcy. The decentralized nature of DeFi protocols mitigates much of this risk. Decentralized finance is constantly evolving, and we can for sure all be excited for the future. What are your thoughts on DeFi? Do you think it really is the future of finance? I'm excited to read you in the comments on this. I will see you in the next video. Yo, do DeFi. Yo, do DeFi. Damn.